Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Tuesday, May the 25th, 2010, and it's been a heck of a day. Let's look at some charts. Okay, this is the Dow Jones Industrial Average 6-month chart. She's down 22 points today, but that's not that bad considering she was down almost 300 points early in the morning. Um, Before we go into that, let's talk first about what's going on today. We had our website was down for about, I don't know, an hour towards the end of the day, last hour of the day. So that's just another reason right there to follow us on Facebook, Twitter, or YouTube. Just have a backup plan because I would hate to be like, hey guys, I'm going to cover one of my shorts and the website be down and you're like, how do I know? You don't. So go follow us on Facebook, Twitter, or YouTube, or something like that. Speaking of YouTube, yesterday you guys rock. Let me tell you what you guys did. My analysis can be awesome all day, every day, and we can make tons of money here, and our site can be 100% free. But none of that's going to matter if nobody knows about it. And people know about our site. Let me tell you what happened. Yesterday, we crossed 400 subscribers on our YouTube channel, and that's like we were at 300 like 6 days ago. Okay, so in 6 days, we've gone boom. That's huge. That's awesome. Thank you. You guys are making this happen, and I'm going to keep working my tail off for you just because I appreciate that, all right? God bless, and let's look at some charts. All right. The market, the Dow Jones. Okay, if I were to look at a chart, whenever I do this, I'm already short right now, as you guys know, in my portfolio that I keep on the website. Um, Whenever I look at the chart every day, I just look at it and I glance at it and I say, okay, it's either a buy, a sell, or a hold. Your best case scenario right now is a hold. You would not be a buyer of this. And here's why. It's a hammer-like looking thing, but the wick is too long and it's still got sell pressure mixed into it. And most important, you had a new low. But boom, right there. See this low point here? Yeah, you pierced it right there. You know what we said about piercing trend lines? When you see that, it's a matter of time before you break through them. See right here? You had this trend line, okay? It's bouncing along. Yes, and we like the trend line bounce. Pierce. Uh-oh. Play, hang above it, pierce, play above it, break down. That's how it happens, okay? When you start seeing the piercing signs, you're in trouble. And bulls are in trouble right there, okay? Sorry to tell you guys that, but we do have some good news for you. Check this out. Okay, a while back I said the only thing I would be long in this market is gold. And here's why. See this hammer formation here and then another one right here? This is about the same level. That's because of a support that's in this chart right here because of the fear and all that stuff about the European credit crisis and the currency issues. So there's a flight to gold here. You already broke the previous high, so there's potential for this to come up here and test this level. You could actually go long at 1,198 in gold, middle Bollinger Band line here. Set a stop right here, your previous low of 1,166, and just trade her up to this level. If you want to be long, that's where I would do it, okay? And I would personally stay on the short side. That's where the fun's at, okay? All right. Okay, this is the Hang Seng Index, basically Asia's market. And typically you would not care what these guys are doing, but these are the guys that basically brought down the market today in the US. They had a big old sell-off. They're concerned with Europe. They're concerned with the potential war between North Korea, South Korea, and here we have this monster sell-off. This is a very bearish signal. We look for this to go much lower. And this is just basically not the bottom. That's an easy way to say that. Most important thing here, I want to point out, we're going to start seeing this on all these charts. Remember, the U.S. is following, okay, following Europe and Asia lower. I mean, yeah, Europe, the European Union issues and the Asia's chart rolling over. They're following them, and if you look at their chart, you can see us following along. Here was their pierce of their previous support line, okay? I remember when that happened. I told you guys about it on the chart on some video. I said they've actually locked in their sell-off, and here was the pierce, and then there's the breakdown. Okay, close below it. That's the same thing you're going to see on chart after chart after chart today, and we've just seen the pierce today on the Nasdaq. No, it wasn't the Nasdaq. It was on the S&P and the Dow Jones. I'll show those charts in a minute, but we've already pierced them, so we're going to go close below them. So don't be trying to buy this. Here's the FTSE, exact same conditions. Note. Okay. And the pierce, bounce back up here, pretend it never happened, and then break down through it. You're going lower. Okay, here's the S&P with the exact same condition. Pierced it, we're going lower. Okay, now she could bounce. There's potential, but the end result will be lower anyway. Okay. Here's the NASDAQ. It's the only one that's actually not behaving like the Dow Jones and the S&P. We didn't have a hammer formation on this chart. We had a gap down and then a run higher throughout the day back up to the previous close, just shy of it. But if you were looking for a bounce to enter a short position, there you go. Okay, that's about as much bounce as I'd be trusting for. Anything else would just be a gift. All right, yeah. She's not pierced yet. The low point. I believe she will, but to keep in mind throughout our analysis from this point forward, the NASDAQ is actually stronger than the S&P or the Dow Jones Industrial Average as far as their charts go overall. Let's have a quick look at the long-term charts. This is the Hang Seng chart on the long term. This is a 4-year chart. Each one of these candles is 1 week. You can see a well-defined rollover pattern right there. Yeah, that's nasty. You're going to see this do this number, okay? See the same thing on the FTSE. Actually, you don't see the same thing on the FTSE. You see the first down leg, the fake support, the second down leg. You'll be pressing this 4,500 before long. So be watching for that. But the main thing to consider is the FTSE and the Hang Seng, both of these world markets here, when Europe's going through a financial crisis and Asia's potentially going into a war situation, their charts are rolling over. I don't care what the U.S. charts look like. If it says we're going to try and make a support here, they can't support when you've got two large countries pulling you down, okay? I don't think I could say it any clearer. I would stay short. Plain and simple, add on any bounce. And a bounce would be, a shocker, because I mean, you could see a day or two, but as far as a really substantial bounce, I'd be shocked to see that, and I would just short it anyway. I think I've said that everywhere you can say it. Okay, anything else to add? Let's look at our disclaimer. The disclaimer. The information provided here is our opinion only. You can read. Okay. Again, I'd like to thank every one of you guys for your support on this project. As you know, I spend thousands of dollars every month to provide this service for free. I don't mind that as long as we're growing consistently, then I know that sooner or later I won't have to pay for it. So I appreciate all you guys have done for us, all your support, sharing our videos on Facebook, Twitter, MySpace, you name it. You guys have put it out there on your websites, etc., etc. So thank you very much. I really do appreciate that. If there's anything else I can do for you, man, just send me an email. And if somebody asks me for $1 million, I swear I will snap. All right, take care, guys. Talk to you tomorrow.